Welcome everybody to the channel. My name is Liam. In today's video, we're going to talk about Shopify stock. I'm going to give my opinions. We're going to break down their financials. We're going to break down their company, what they do, their market they're in, the growth potential they have. We're going to talk about my investment thesis, why I think this is a good investment, why I think it might be a good investment for some of you, and then we're going to wrap it all up. If that sounds interesting to you, stick around, leave a like on the video, and let's get into it. So let's start with a really quick overview of this company. If you didn't already know, Shopify is a giant Canadian e-commerce brand. It might be the giant Canadian tech company right now. They essentially provide a service to people trying to sell things online. They built this entire ecosystem for merchants to sell products. So they'll do your marketing, they'll do your payment processing, they'll host your website. They basically make it possible for anybody to go out there and just with a little bit of money, sell products on the internet. It's a massive, massive innovation, and it allows so much productivity from its actual creation. If you're looking at this company's stock super quick, you might notice IPO'd at about $17, and then with splits and everything, it hit a high of about 150. Today we're sitting somewhere in the 70s. So split adjusted is an incredible return, 2,000+%. But for a lot of people that invested in the last couple of years, they might be down significantly on their money. I am not going to cover why this went up so high and why it went down, because that's in the past now. I can't control that. What I can do is talk about why this is a good investment today, the things that make this company so impressive, and the reasons why I think this company could be like buying Amazon after the .com crash. Let's talk about their financial performance. In 2023, Shopify brought in about $7 billion. 2024, they're expected to do 8.5. So you're seeing pretty high revenue growth year over year. I think that's 20 something percent. As the years go on and that growth continues, there's something really important that we need to dig into. And that's how Shopify makes that money. Because they essentially have two portions. They break it down themselves into their subscription solution and their merchant solutions. Their subscription solutions in 2023 brought in about $1.7 billion. Their merchant solutions brought in the other $5.3 billion. On their subscription solutions, the cost to them, the money they spent to make that $1.7 billion, was in the range of $300 million, versus about $3 billion to make the $5.2 billion from their merchant solutions. So right away, to me, I see a company that has subscriptions with an absolutely incredible profit margin. And the thing that makes me even happier is that that subscription amount is going up and up. The amount of people that are signing up or that are moving from one tier to the next is increasing. And so Shopify is able to grow this incredibly profitable part of their business. In 2023, this company was profitable by about $150 million. With increases in subscription, we can see that number rise and rise and rise in 2024. And part of what's so exciting about that, what's exciting about the increase in profitability, the increase in subscription numbers, is that they've also been cutting cash heavy parts of their businesses. In the past couple of years, Shopify tried out this shipping service, basically. It's almost like the fulfillment by Amazon service that Amazon has been offering for a couple of years. But when Shopify tried it out, they found they were losing money and it didn't make sense for the kind of business they were. They weren't the storefront selling everything. So when they tried to ship everything, they found themselves burning money. They've now cut this out of their business. And so you see an even leaner, more profitable business moving forwards. And as those expenses come off the books, you're going to see profit margins increase significantly. As an investor, finding a company that I think has great growth potential at a time like this, where they've just cut expensive parts of the business and their highest profit sector is growing rapidly, now that's pretty impressive. And that also shows me that this company has the potential to be a cash flow beast in the near future, growing and growing that cash flow and reinvesting that money. Their subscriptions are safe. We'll talk about their competitors in a moment, but they are not worried about losing market share right now. They've actually been gaining market share. And so they have the option to innovate. They have the money to invest into themselves. And the return on investment has been very impressive. When you look at the key ratios for this company, you'll find that their EPS number in 2023 is sitting at about 0.7. 2024, we're going to see it just above 1. I think this number is going to grow exponentially in the next several years, where you'll see earnings grow and grow and grow and grow and grow. And you won't see the kind of dilution that they would need to do in order to raise money if they were still burning cash. You'll also probably see that PE ratio that they have right now decrease slightly, but you'll see the earnings grow fast enough that the company's stock price continues to soar. Now let's talk about their market position and their competitive advantages. This is where I think Shopify shines the brightest. They are not afraid to stand on their products, and they have really offered a compelling package to merchants. When you go onto the Shopify website, you'll see they advertise just how much better they are than their key competitors. I went and I looked at their site talking about them versus Salesforce, and it feels almost like looking into the Apple ecosystem back in the day. They have metrics that they can prove we are better at this, we are better at that. We can get you higher returns, we will get you better fulfillment, we will increase the amount of people who purchase your products. And once you're in that ecosystem, you're not going to leave. They have a list rotating on their website of companies who have joined Shopify, who have left other services. And that list keeps growing and growing and growing. This is right now the number 2 player in all of e-commerce. And I think that's an absolutely massive thing to own. One of the unique selling points of this company is how they scale with the merchants they're working with. The lowest tier you can get on the Shopify website is $7 every single month, selling just on social media. And you can grow that all the way up to enterprise level customized solutions. That means that as Shopify helps their customers grow, the actual market that Shopify can address, their TAM, will grow as well. If these e-commerce brands that are working with Shopify outcompete traditional retail, because in part Shopify helps them so much, then the total addressable market for Shopify can continue to increase over time. This means that this company theoretically is growing its TAM as it grows its market share. That has only happened in a few key companies if you think about it. You're talking about Amazon, who grew e-commerce in the first place, it feels. You're talking about Google, who grew advertising revenues to a level nobody had seen before, right? So Shopify has this kind of opportunity, but they're making it much more customizable, much more personal. Now, I want to talk about my investment thesis a little bit, because I think this just might be the very best long-term growth Canadian company. I think any money I put into this company, I am going to wait and leave for at least 5 years. This gives them lots and lots of time to continue building out their profitability, to grow that subscriber amount and the amount of money they're pulling in from subscribers, and to reinvest those profits into the company in order to grow in other areas. So that might mean they get more efficient at marketing. That might mean they get more efficient at fulfillment. They might make some key partnerships. They might make some key acquisitions. That is why I think this is the long-term growth play that I really want to build up in my portfolio. And I'm a Canadian. Having this company that was founded in my hometown be one of the e-commerce giants is not only tax efficient for me, but is also a source of a little bit of pride. I'm very happy to be a Shopify investor. However, of course, like any other company, I need to consider risks. And I think there's 2 big risks that I want to talk about in this video for you. The first risk is the e-commerce space. This is a space that has been absolutely brutal for 99% of companies to survive in. Everybody is constantly innovating. Everybody always has a better product. Everybody always has a better service. It gets constantly easier to spend money online. And so the first risk would be somebody out innovating Shopify. Who knows what the next big e-commerce brand will be? And who knows what kind of competitors might take advantage of the next 5 to 10 years in order to gain huge market share? I don't know that. The second big risk for me is the Goliath in e-commerce, Amazon. Now, I'm not sure that I think that this is a huge risk to Shopify in a sort of Coke versus Pepsi way, where these two giants are going to be in a sort of duopoly doing the same thing for different people. But I think rather that Amazon really has its world that it exists in, and Shopify has its world that it exists in. And I think that theoretically they could work together. But that doesn't mean that Amazon doesn't try to make a competitor product that beats Shopify in the next 5 years. That's always a risk in a market like this, where you have a single giant company at the very top. Now, how do I deal with those risks? I think the easiest option is to diversify. I already own some Amazon stock. And I think it is one of the main companies that most people probably own. It's a big part of the S&P. It's a giant market cap. So if you own the NASDAQ, if you own the S&P, you probably also own some Amazon. And you might want to own some on the side. It's been an amazing investment. And if another brand shows up that looks like it could take Shopify's lunch, well, I'll just invest in that too. And I'll make a video about it that looks a lot like this. Because at the end of the day, as long as we're diversifying, as long as we spread out our investments enough in the markets we're interested in, we'll be okay either way. So at the end of the day, Shopify is a huge buy for me. We covered that they're becoming more and more profitable, that they exist in this amazing e-commerce space that they are helping grow, and that while they have competitors, that they also are in a unique position growing with merchants that might be able to thrive from partnerships, from acquisitions, from deals into the future. And that's all I have to say today. I hope you enjoyed the video. If you did, please leave a like, comment, subscribe, all that stuff. If you have any questions you wanted to ask, leave them down below, and I'll see you in the next one.